My name is Lisa Treese, and I will be the speaker for this particular webinar this morning, and I just want to say welcome to everyone, and thank you for spending a little bit of time with us this morning as we go over some of the recent changes and updates that have come about due to COVID-19. So we just are going to go over some question and answer type situations with some of the updates that we had posted initially when this all began to roll out, and then some things that we have eased off of since that time. We know that this has been an ever-evolving situation for all of us and a different field of operations for all of us as we've tried to mitigate risk and look at risk and determine what's best for everyone. So thank you for your time. I will do just a little bit of light housekeeping before we get started. Please do not put your phones on hold during the presentation, because if we do unmute the lines, then that will keep anyone from being able to hear any of the questions, and all we'll hear is your background music or advertising for your company. So I would appreciate it if everyone would just keep their lines open and not muted. We are doing this in different offices, trying to be socially distant, so I have a host for this call that is not me, and so we're going to try to make sure that we can get this to transition like we need to, so y'all bear with us if we don't. We'll get it started. We've all had kind of a challenging 2020 year, but things are beginning to open back up from a business standpoint, and we want to make sure that we provide you guys with the most recent directives that we have that we're operating under, and making sure that you're aware that we are still fully staffed. We are fully able to give you great turnaround time on the files that you do submit to us. We're currently at about a 2-day review time and the same time frame to review conditions. We're fully staffed and operational, and we are prepared to work remotely. So we just want you to be aware of that. Because of all of the information that's come forth very quickly, we've had our share of announcements that have been made. And I know that gets confusing because you're probably getting them from all kinds of investors that you're operating with or selling loans to. So we wanted to have this to bring you up to speed on the most recent current guidelines. So we're going to kind of do this in a question and an answer format. Question 1, are loans in forbearance subject to the early payment default provision as defined in the lender agreement? And will the lender have to buy the loan back? We updated the initial information that we put out. Initially, our answer to this question would have been yes, they would be subject to it. But we've updated our stance on this situation, and with our lender notice that we sent out, which was lender notice 25-20, we updated it, and it currently, the guidelines are that we have excluded the loans with forbearance request made post-loan delivery to us from those EPD provisions, early payment default provisions that are outlined in the tri-party lender agreement, if the reason for the EPD is due to COVID-19 forbearance. So that is not an issue if the loan goes into early payment default because of the COVID-19 forbearance. You all will not be subject to the buyback or repurchase requirement. And this is a North Carolina call, and the new lender agreement even further reduced the months of early payment default parameters that you're working under as well, which is another positive. Keep in mind that any other early payment default situation or non-qualifying mortgage loan provision still remains in effect, and I'll give you an example of what I mean by that. If, for example, Fannie Mae or Freddie Mac request a file to be audited post-purchase, and we send the file to them and they find any deficiencies in the file, or they decide that the loan is not eligible to be sold to them after all, then that is a parameter of a non-qualifying mortgage loan that remains in effect in your contract. You will still have to have those loans in that type of situation repurchased because it can't stay in the pool, is not eligible, deemed by Fannie or Freddie or FHA or whoever the case may be in that situation. Question number 2. What happens if a conventional loan goes into forbearance post-purchase but prior to securitization? Is that a lender repurchase? Our current guidelines would give you an option. The lender would have an option of repurchasing the loan, or you could select to be billed for the loan level pricing adjustments that we would be assessed for the loan delivery of that file, meaning that you could be subject to 500 basis points if you have first-time home buyer, or 700 basis points for all other type of loan transactions. So there would be a choice. Currently, we're averaging about 30 days between loan purchase and loan delivery. That's provided there's no situations that arise after the purchase of the loan that we discover that the DU or the LP was ran incorrectly, or there was an issue with it that has to be fixed and causes a delay, or we discover there's an issue with a deed of trust or a note that wasn't discovered prior to the loan purchase. Something comes in, we have a rider in our package that we've reviewed, but when the deed of trust actually comes in, it wasn't actually recorded with a rider. Those type of issues, if there's things that have to be fixed, that itself wouldn't stop the loan from being pulled. I'm just trying to think of things that we could have to come back to you for. But it's not an automatic repurchase. Question number 3, what happens if a government loan goes into forbearance post-purchase but before securitization? Is that a lender repurchase? No. Government loans in early forbearance are eligible for inclusion in a Ginnie Mae pool as long as the lender is able to issue the MIC or get the loan guaranteed. And what we want to make sure that you understand, especially on the FHAs, is the quicker that you can get that MIC issued, the better for all of our sakes. And basically, we know that on many AHFA products with down payment assistance, depending how the loan closes, you have to wait until you have had the purchase funds transferred in MERS in some cases, if it's a amortizing loan that's closed in your name and being transferred over to us as a servicer. You have to wait, and all of that has to occur prior to getting the MIC issued. But what we would suggest is have a thing in place, have a process in place to get these loans insured as quickly as possible, therefore reducing that situation and risk. As long as the MIC has been issued, we're able to pull the loan. As long as you all have got the guarantee, we're able to pull the loan. Those would not be subject to a lender repurchase. Now, depending on the timing of some of this, you want to make sure that you follow the guidance of each agency so you can ensure compliance on your end as well. FHA will have some situations where they may come back to the originating lender for indemnification. You just need to be aware of what those situations are and the timing of those situations, because we're asking that you be in compliance with those guidelines. If you find as the lender that you're going to be unable to issue the MIC, or you're not going to be able to get the guarantee on the loan, please contact us as soon as possible. We want to be able to have that information, work with our lenders, and know as soon as possible if you see that that's going to occur. Will ServiSolutions purchase a loan if the borrower has indicated their need or requested forbearance prior to the purchase? We have not changed our stance on this particular issue. This has been consistent throughout this whole time frame of COVID-19 updates. So ServiSolutions is unable to purchase where the borrower is in forbearance status or actively seeking forbearance. We will continue to require you all to execute a forbearance attestation, as we have communicated in our lender notice 2620. Question number 5. Will ServiSolutions accept a lender internal forbearance attestation document? The answer to that is, when we initially rolled this out, we were requesting you all to use our forbearance attestation document. We don't require that your borrower sign that, or we don't require that your borrower also provide a forbearance attestation like we see in some of the files that we receive. We don't require that. We will be happy to review any internal forbearance attestation document that you all have. It would have to be approved by our single-family administrator, and if it was found acceptable, then we would use your forbearance attestation if that is something that's easier for your company as far as getting the documents, and you don't have to have one extra new document that's a manual process for you. We'll be glad to review it and let you know if yours would be acceptable. We do continue to say that you all must have processes in place to actively track and monitor any of the requests that you receive for forbearance or mortgage relief to these home buyers prior to us, of course, buying these loans. And we're asking that you, of course, notify ServiSolutions when that situation occurs, when you've submitted a file to us and then you get a forbearance request. If you have forms that you would like to see reviewed, instead of using our forbearance attestation, you can send those requests to me. I'm probably, our single-family administrator is involved in a lot of other issues that are obviously important, and I would be able to gather that information and provide it to her in such a way that we can get those reviewed. And I'll give you my email address in just a bit before we're out of here. Most of you probably already have it, but we'll take care of that as well before we get going. Okay, question number 6. What are ServiSolutions' current VVOE requirements? Now, this is one we have had a lot of documentation out there, so I can understand any confusion that may still exist, and I want to clear up some issues to make sure you know where we are currently. When this first rolled out, we were all looking at what is our risk, what are we going to have, what are we going to be looking at as far as a servicer is concerned. And there's a lot of risk involved in this for all of us. So we were pretty conservative. We were very conservative in saying you all needed to verify that they were still employed at the date of closing, and that prior to us purchasing the loan, we were going to verify that the borrower was still employed. Well, since that time, we have eased up on these guidelines substantially. We moved from getting a third-party vendor to verify continued employment. It was taking a tremendous amount of time to get that done because so many companies were closed and not answering their phones and not replying to our request. We transitioned it back to you all because you were having better luck than we were having getting a verification of continuation of employment done. And then we decided to remove all of that altogether and go back to just saying if you received or if you did a VVOE within 3 business days prior to your closing, we would accept it and not require anything else. Now, keep in mind that FHA did allow you all to not do a VVOE on their loans. That was one of the reliefs that they gave you. Well, in those instances, if you did not do a VVOE within 3 days of the note or on the note date, then we're going to have a VVOE post-closing or some kind of alternative documentation that would meet the FHA guidelines. And you can follow the FHA guidelines for what those are, but we're not going back and, to the situation where we're doing 2 VVOEs. If you've done one date of closing or at least within 3 days of the note, that's all we're requiring. That is a much more streamlined, reduced process for everyone, and it's moving these loans through a lot quicker. Keep in mind that part of the reps and warrants that you all are making to us is that you're delivering a loan to us that's eligible to be pooled, and it meets the the guidelines of the loan product that you're selling to us. So you want to make sure that those provisions that you are providing in your reps and warrants are accurate, that the borrower was employed on the note date. If we go back and we have to have an audit of the file for any reason, and you all know that we're subject to the same type of audit requirements that you all are, that if we discover that a borrower lost their employment on or before the date of the note date, that loan would be subject to repurchase. So we just need to make sure that we have the accurate information when audit comes. What is ServiSolutions' requirement for self-employed borrowers during COVID-19 pandemic? We've instructed you all to follow the current guidelines that are applicable for your loan type. Like there are certain Fannie Freddie guidelines. We've posted the lender letters here. Follow FHA guidelines as far as self-employed borrowers are concerned. These are updated periodically, so you want to make sure that you're going with the appropriate documentation and updates when you're looking at loans that are self-employed. That's what we're asking for. You all are repping and warranting to us that you're meeting those agency guidelines on these loans that you are delivering to us or selling to us. Question 8. Funny enough, I still get this question a lot, and I think a lot of this has to do with the fact that we are HFAs that you're doing business with for the most part, and we have a compliance review for HFAs, and then we have a purchase review, which are two entirely different things. So when you ask me, are federal tax transcripts required, I try to be careful to tell you that from a ServiSolutions standpoint, we only require the most recent year's tax transcripts for conventional loans, Fannie Freddie loans sold to us. We don't require them for any other loan product or type. Now, I'm careful to say that if you're doing an MRB, like a mortgage revenue bond loan for your HFA may require tax transcripts, or if your borrower is self-employed, your underwriter might require it. But from a ServiSolutions standpoint, we currently only require the most recent year's transcript for conventional loans. What does recent year mean? Well, right now we're following the IRS extensions for filing, and we're only requiring that you provide the 2018 transcripts. Now that's at least through September the 1st. If the IRS extends the filing time, then we will extend this as well. It's going to be based on what they say as far as the filing time is concerned for the 2019 returns. So currently we're looking for 2018 transcripts until September the 1st. Only on conventional loans. Will ServiSolutions permit the use of remote online notaries or e-signs for loan closings? This question is based on the lender notice 1220 that we sent out. Our document custodian does not currently have an e-vault for managing electronically signed notes, and all notes must have a wet signature. So we're looking for our notes and our mortgages to be wet signed. We are unable to have electronic or remote notaries. The document custodian does not accept those at this time. So the notes, the deeds of trust, have to bear wet signatures. So your mortgages and notes have to have wet signatures. We ask that you do it in blue ink, if at all possible, have it done in blue ink. And then we would tell you that all other documents that are executed at closing can be signed with e-sign technology. Just make sure you have your documentation in the closed file that you upload to us, that you're following the e-sign act and all of the stuff that you need for that. But we do allow you to have e-sign technology on your CDs, on your initial escrow disclosures, on all the other documents within the file can be e-signed except your note and mortgage. No remote notaries, but notaries, they have to, sign in the presence of the notary. So once again, we're basically here for you, and we hope that you guys are pulling out of the COVID slump as well, and you're beginning to open up business a little more as business as usual. And this has certainly been an unusual home buying season for all of us. We want you to know that our operations and our servicing departments are 100% staffed. We are giving 1 to 2 day turn time on new file submissions and 2 day turn time right now on the review of conditions. Once again, we are prepared to work remotely should the need arise and this keep on, developing into even worse situations. So right now, I'm giving you a list of contacts. My email address is up here, as you see, along with our single-family administrator, Carrie Hamaker. If you have questions regarding any policies, then you can direct those to Carrie or myself. If I don't know the answers, I will get the answer for you, and I will respond just as quickly as I can. If you have issues where you want us to review your attestation form, you can send those to me. I'll gather them. I'll get them together and make sure that they're appropriately reviewed by the right parties. If you're having issues, because you might, if it's been a while since you've gone out to the lender portal to reserve any loans and you find yourself inactive, you're having issues with our lender portal, you can contact Brian Hunt or Candy Clapp. They will, if you are not the administrator for your company, they will refer you back to your administrator. We can activate the administrators, but they have to activate the users on your end. So we'll take care of that issue for you with Brian or Candy. If you have closed loan questions, like delivery questions for how we're reviewing a loan or a condition that you may have received and you want to speak to a person, you can request to Angie Wilson. There is her email address, or you can call her. And Candy Clapp is another good resource for that as well. Our purchasing supervisor is Julie Adams, and this is her address. So if you get a purchase advice and you have something on your purchase advice that you do not understand, or you have a question about it, or you have an issue with it, then you can contact Julie. She would be your first point of contact for that situation. Renee Dotson is our loan collateral and delivery supervisor. If you have issues with your original notes, your original collateral, with final documents, Renee would be the supervisor that you would speak with. Greg McKitt is our loan delivery manager. He handles all of our pools and securitization. So Greg is going to be the one dealing a lot with the document custodian and coming back in cases where there's issues with a document that makes the loan, makes an issue arise that has to be fixed. He'll either come through us or he will come to you directly. He's the one that you would reach out to for all final document billing and that sort of situation. And that is basically what this call was. I'm not sure that I can actually see any questions that come over. Let me see if I can. We will entertain questions. Yes.
You have one question. It says, what if we physically can't get the transcripts? Can we use the 1040s in lieu?
Currently, we have not had any issues that we're aware of with anyone getting the 2018 IRS transcripts for a conventional loan. I can only speak for us, and we do require the transcripts because that is what Freddie and Fannie have required, and I haven't seen any relief under that. But I will definitely check with our internal audit quality control division. That is actually who we obtain these for, to make sure that we have them in the file in case the files are audited. I will find that out to see if there's been any relief that I'm unaware of as far as accepting a 1040 in lieu of the transcript. We haven't seen an issue with that. I haven't seen that being pended on the conventional loans. So I don't know if it's an issue where your borrower just has really not filed the 2018 or what the issue might be, but we'll look into it and give you a response. I will send out some questions and answers to the group that have attended this training and answer any questions that I can't answer in that format. So we'll keep that question, and I'll get you an answer from the group that can respond better than me. Any other questions?
That was the only question that I see in the chat box right now.
Thank you, Kathy. All right, well, we'll keep the chat box as a question and answer box open just a little bit longer, but for the rest of you that are busy and would like to get on with your day, you are more than welcome to, end the meeting. If you want to stay and ask some questions, we'll be happy to hold it open for you and do that. Once again, thank you for your time. We are here if you have questions that we can answer. If we didn't cover something in this webinar that you're curious about or you need answers to, please make sure that you email me or Carrie, and we will be glad to assist you any way we can. Hope everybody has a wonderful afternoon and stay safe. Thank you. We'll keep the chat box or the question box open for about 10 more minutes.